The earnings parade is in full force this week. Visa beat estimates, bolstered by stronger spending, and this comes just after the credit card company announced they will plan to allow their cardholders to spend their cashback rewards on new so-called Trump savings accounts. So for more on this, we're joined now by Nate Svensson, Senior Equity Research Analyst at Deutsche Bank. It's good to have you join us. Thanks so much.
Yeah, thanks for having me, Lindsay.
Let's get into the Donald Trump news in a moment. But just to start, the shares price is up now after the opening bell, but it was trending down this morning. Why do you think that is for Visa?
Yeah. Listen, all told, these were really solid results from Visa, but I think there were a few puts and takes that I think were weighing on the stock this morning. I guess starting with the positive side of things, Visa had a nice beat on the top line. This was underpinned by consumer spending growth remaining resilient. Volume and transaction growth came in right in line with our estimates for the quarter. And Visa's value-added services business continues to grow really strongly. It grew 28% in their fiscal 1Q. Company also benefited from incentives, which is a contra revenue line item that came in a little lighter than expected, mostly due to deal timing. On the flip side of things, there are some takes. Margins were a little bit softer than expected. OPEX growth was higher than the company guided. They guided a low double-digit growth. They came in at 14% on an adjusted basis, mostly due to marketing spend around the Olympics and the World Cup. That led to a smaller beat on the bottom line. EPS was 3 cents above consensus relative to the about 300 basis points of outperformance on the top line. There's also this topic of international transaction revenue growth. Investors we speak to spend a lot of time focusing on cross-border volumes at Visa because that is a high-yielding revenue stream for them. The spread between cross-border volume growth and international transaction fee growth was wider than expected this quarter. Visa benefits from FX volatility. FX volatility came in lower than the company had anticipated, and that weighed on growth in that particular line item. So puts and takes altogether, the consumer remains healthy. The consumer remains resilient, both in the U.S. and globally. You put all of that together, the company was able to reiterate its 2026 guidance, both on the top line and bottom line. In our preview note that we published ahead of earnings, we said that that's what we expected would happen. I think there were some investors that were maybe hoping for a little bit more, maybe a guidance raise on the top end, especially in light of really strong 1Q results. And so I think you put all those factors together, that probably explains what was going on with the stock this morning.
Interesting. Okay, with all that said, though, the company's fiscal second quarter outlook implied a, quote, step down in sequential growth. What do you think that'll mean for the company moving forward?
Yeah, I think that was pretty well understood by most investors and sell-side analysts. Listen, a lot of this gets into comps, year-over-year growth comps. They grew really, really strongly in their fiscal 2Q last year. The comp gets a little bit harder. So on a like-for-like basis, sequentially, growth is stepping down a little bit. I think the company had done a good job at communicating that ahead of time. So I don't think it was a real surprise to investors. They guided to low double-digit growth on an organic constant currency basis in 2Q. We were at 11% heading into earnings. So not a huge delta. I think that was well understood. And then comps will get easier in the back half. So growth should continue to improve from here.
Okay, so let's bring in Donald Trump now, because earlier this month, Trump did announce the Credit Card Competition Act, which is placing a 10% cap on credit card interest rates for 1 year. How do you think this could affect Visa moving forward?
Yeah. Listen, it's been tough. We still like Visa. We're buy rated, $410 target price. Shares have underperformed year to date. A lot of that is noise coming out of DC and coming from Truth Social posts. So you brought up two separate topics. They are interrelated, but two separate things. There's the Credit Card Competition Act, and there's the proposed 10% interest rate cap on credit card interest rates. So two separate things. The Credit Card Competition Act, I'll take first. So this is a piece of proposed legislation that has been floating around since 2022. I think it was first introduced as a potential bill in 2023. And it's been dead on arrival for the last few years. So it does have bipartisan sponsors, Dick Durbin and Roger Marshall. One's a Democrat, one's a Republican. But there's broad-based bipartisan opposition to this bill. Hasn't really been able to take off the ground. Trump did throw a wrench into things when he posted on social media about this a couple of weeks ago, seeming to throw his weight behind that. He has obviously made consumer affordability a key focus for his administration heading into the midterm elections here later this year in the United States. We still think the base case is that the Credit Card Competition Act doesn't get enacted. There is still that broad-based bipartisan opposition to the bill. Visa management on the earnings call last night was pretty adamant that they think the CCCA, as we've been calling it, is negative for consumers, and they're doing a lot of work to educate legislatures on the negative impacts that could come about because of CCCA. The other topic, the proposed 10% cap on credit card interest rates, just to clarify, there's no direct impact to Visa's business model. That is from the issuers, the banks that issue your credit card, whether it's Bank of America, TD, whoever it happens to be. Visa is a network in the middle. So we don't think that one gets enacted either. You listen to the earnings calls from all of the big banks, from all the other credit card issuers. They've been pretty clear that if there were a 10% interest rate cap, there would be a reduction in credit access for consumers in the U.S., particularly for low-end consumers. So if the administration is placing this focus on affordability for low-end consumers and they do this cap, it would actually reduce their overall spending power. At least that's been the messaging from bank and credit card issuing CEOs. So there are risks, definitely headline risks, and then we think that's what's been weighing on Visa shares so far year to date. We think probably low likelihood that either of them get enacted, and I think the administration is going to focus on other areas where they can have a more tangible impact on consumer affordability going forward.
What about Visa's plan to allow cardholders to direct cashback awards to the new Trump savings accounts? Like, I think it's surprising how much you're seeing Visa intertwined with politics this week. Nicki Minaj was even involved. It sounds like a weird dream. I mean, there's just so much been going on. What do you make of that part of it?
Yeah. I was surprised to hear Nicki Minaj and read about that on Bloomberg. Listen, Visa is going to do everything it can to enable the most optionality for the consumers using their cards. I think from what I've been hearing, it seems like there's going to be really strong uptick for these savings programs that the administration is implementing here in the U.S. Visa wants the users of their cards to be able to benefit and use rewards to kind of help build the financial stability and foundation for their children going forward. So I think ultimately, with regards to the fundamentals or the outlook for Visa, it is something very marginal. I don't think it's going to have any material impact on growth or the business's trajectory either in this year or in years going forward. But Visa wants to enable that flexibility and that optionality for their consumers. And whether it's these Trump savings accounts or whether it's anything else that the consumer wants, Visa is going to work to enable that over time.
Okay, that is all the time we have, Nate. It's so good to have you on. Thanks so much for breaking everything down for us. Appreciate it.
Yeah, I appreciate it. Thanks for having me.
Thank you. That's Nate Svensson, Senior Equity Research Analyst at Deutsche Bank.